John, this is a scenario developing where we're actually going to get some real world case study type material on how the real estate market and the housing market and home builders respond to a possible lowering of interest rates, even with valuations for homes really sky high from where they were pre-pandemic. What are the expectations for the people who actually build the homes versus the ones who are selling their existing ones?
Hey, Dom, thanks for having me. So I think it's a really interesting question and an equally as interesting time in the home building industry where the public builders just continue to really outperform the market. To your point, existing home sales have been very slow. New home sales, in fact, have been sort of flattish. But the new home builders, the public builders, continue to outperform very significantly because of their efficiencies, their size and scale, and their ability to offer financing to buyers, which helps, with that affordability challenge. And so if they can get rates into that called 5 to 6% range, there's a tremendous amount of demand out there. And it's, in fact, I would tell you that our recent survey, housing intention survey, suggests that 33% of buyers or potential buyers are thinking of buying within the next 12 months. That's above the historical average of 30 back to 2014 and above the pre-COVID average of 25%. So there's a lot of underlying demand out there, and the public builders are seizing upon it.
There's no question that there's demand out there. We know it. There's any survey you can find out there among potential home buyers shows that there's latent demand out there. The issue becomes what unlocks that demand. You either have to put a lot of supply on market or put a situation out there where a lot of existing home buyers are going to want to put their houses on the market. What do you think is going to happen if interest rates drop to that sweet spot level you were talking about?
Yeah, it's a good point. I mean, what I would tell you is that, while rates have been high, it's sort of been Goldilocks for the public builders because of their ability to buy down into that sweet spot where the existing home market cannot do that. And the other, private builders can't do it either. They just don't have the balance sheets and the ability to do it. So I think that where we are today is very good for the builders. Now, I will tell you that lower rates will take that all day long. I think that more supply coming back to the market on the existing home front is not a death knell. In fact, at the other end of an existing home sale, there's usually a home purchase, and in many times that's a new home purchase. And so I think that lower rates any day of the week are better for housing in general. And I think that will begin the turnover cycle that we need and will be, very, very fruitful for the builders as well.
What exactly is Toll doing right? What are they doing correctly to deserve a buy rating and a target price that implies 16% upside even after a great run it's already had?
Yeah, no, it's a great question. Look, I would tell you that the public builders in general and Toll specifically have shown this very, very significant ability to adjust to a changing market. What Toll has done, they're the premier luxury build-to-order builder, but they have shifted their portfolio a little bit more towards spec building, which you see with some of the lower kind of first-time and entry-level builders, where you're starting construction on a home before there's a buyer in place. That increases efficiencies. So about 50% of their deliveries in the back half are going to be on homes that were started on a spec basis. About 44% of their portfolio last quarter was to what they call affordable luxury. So again, kind of targeting that first-time entry-level buyer. And when you think about it, 30% of their buyers right now are in that first-time category. So what they have done is sort of figured out a way to very profitably move downstream and address that part of the market that continues to be incredibly strong.
Do you feel as though, based upon your research and your channel checks, that there is still appetite to want to own homes for those home buyers? There's been all of this talk about institutional buyers, people coming in to crowd out actual home buyers themselves, individuals. Is that dynamic going to change anytime soon?
Look, the institutional buyer is certainly becoming a bigger piece of the market, but still reasonably small. And frankly, I think it's overwhelmed by, and this may sound corny, but by the American dream. People want to own homes. That has not changed. There was this, concern that the millennial generation was going to turn out to be very different and, want to rent and just use Uber and not own cars or own houses. That's proven to be incorrect. That American dream of home ownership is still very much in place.
Sure.
And again, the public builders are capitalizing.